Hello traders, the title of this video is Mastering Elliott Wave Count Like an Eagle. Alright, do you want to count Elliott Wave like an eagle? Do you want to master Elliott Wave like an eagle? Alright, why an eagle? Alright, the reason why I say like an eagle, it means that we must keep our eyes wide open like an eagle to dictate or to identify correctly all the waves. All right, so let's begin. Okay, the Elliott wave count like an eagle, and most importantly, all right, how can we master the Elliott wave count like an eagle? Meaning that we keep our eyes wide open. With the information that I have on this chart, I will label this one the first wave. It's not very clear. Maybe if we zoom into it, it may be something completely different. But with my eyes wide open, that's all I can see like an eagle. Therefore, I will call this one the first Elliott wave. Right there. All right, feel free to disagree with that first way. All right. Then I have a bit of pullback here. That's all I can see on my chart. All right. From the highest places, like an eagle in the air, we see a pullback. All right. That's the second wave right there. And then like an eagle looking far, far away down, it looks to us that this looks like the third Elliott wave because from our position far away up, all right, that's all we can see. So we label that the third Elliott wave. Again, all right, from far away because we can zoom into this one here. We will say that from far away, like an eagle will look from far above in the highest places, all right? We'll call this one our fourth Elliott wave. Continuing to count our wave like an eagle, we call this one, okay, the fifth Elliott wave. Color that into red. And we have, okay, a correction. The first part of the correction is an expanded, okay, it's an expanded flat correction here. Okay, a double retracement, followed by the C part of the flat correction that went down big time. From 2007 to 2009, we have the C part of the flat correction. So I need to clarify to traders that the reason why we are calling this, okay, mastering Elliott wave count like an eagle. All right, we are having, okay, eagle eyes view of the chart. We are somewhere up there looking down and we say, well, this looks like the first wave, second wave, third wave, fourth wave, and fifth wave. All right, now we have a double retracement forming the A and B part of the expanded flat correction. So the flat correction is the orange one here. A, B, C. You can see it's quite an expanded deep retracement right here for the C part of the flat correction. We are looking down far up there, and that's all we can see. All right, then we say again, all right, in 2009 the stock market has started, okay, a bullish trend. And again, because we are far somewhere up there, we say, all right, this looks like the first wave of a new trend. All right, so we call this one the first wave of our new trend. I'll color that one into black. All right, and then we say, all right, George, after that first wave, we have something again that looks like a flat correction, which is the second wave of our new trend, which is a flat correction. You see a running flat correction right there. I'll try to color that into red. So that's our flat correction, which is also the second wave of our new trend. Hold on, please, traders. All right. So the first trending phase has ended right there, followed by a flat correction. Now a new trend is beginning right there in 2009 when the S&P 500 has started a new trend. Now we start counting first wave, a flat correction, which is the second wave. Now we have, okay, the third area wave. But that third area wave is a complex third wave that is subdivided into 5 minor waves. In fact, the 5th minor wave of our third wave is also subdivided into 5 minor waves. 1, 2, 3, 4, 5. Tiny 4th minor wave. So this is the third minor wave of our third wave, is also subdivided into 5 minor waves. But I don't want to draw it. 1, 2, 3, 4, 5. From up there, like an eagle looking down through the eyes of an eagle, that's all we can see. All right. And then we have our 4th wave of our new trend. I'll color it again into pink. I like to color the 4th wave into pink. All right, so this is the 4th wave of our new trend. All right. Now we have again a 5th wave that is also extended. Look carefully. First minor wave of our new fifth wave. I'll talk about the tail. This is what I'm talking about. You can see that the tail comes to the beginning. The tail of the second minor wave of our 5th wave has a tail. That's why I say to traders, you have to use your judgment, because trader asked me a question when he got a tail like this. In this case, it looks good. We'll discount the tail and work with the information with what we got here. All right. So something, let me say, it invalidated it, but it probably went down there, but quickly close it. We can put a question mark on it, we can accept it, or we can discount it. All right? So this is the third minor wave of our 5th wave, and this is the 4th minor wave of our 5th wave, and this is the 5th wave of our 5th wave, the 5th minor wave of our 5th wave. Remember again, the 5th minor wave of the 5th wave can also be extended. The 5th wave itself can be extended, and the 5th minor wave or the 5th wave can also be extended. So anytime we hear the word first, third, and 5th, can be extended, whether it's a normal first, third, or 5th wave, or first minor, first, third minor, or 5th minor wave. So we are now right here, this section here, from the moving of the 14 up there, that's the 5th minor wave of the 5th wave, which can also be extended. So, but at this point in time, that's all we will say. But don't be surprised if it continues to go up. It can be extended because it's a 5th minor wave, can be extended like the 5th wave itself. But here it is. First minor wave of the 5th wave, second minor wave of the 5th wave, third minor wave of the 5th wave, 4th minor wave of the 5th wave. Now we are calling this one the 5th minor wave of the 5th wave, which can also be extended. Again, one more time, my friend, though we call this one the first minor wave of the 5th wave, the second minor wave of the 5th wave, we are calling this one the third minor wave of the 5th wave. Understand again that that third minor wave of the 5th wave can be extended, which we may say first minor wave of the third wave of the 5th wave, second minor wave of the third wave of the 5th wave, all right, and the third minor wave of the third wave of the 5th wave, and then we may have something like this, 4th minor wave of the third minor wave of the 5th wave, and we may have the 5th minor wave of the third minor wave of the 5th wave, before we may have even the 4th wave of the real 5th wave, followed by the 5th wave of the 5th minor wave of the 5th wave. When it comes to the wave extension, remember the third, the first, and the 5th, whether it's a normal or the minor wave. But with the information that I have today, that's all I can say. First minor wave, second minor wave, third minor wave, 4th minor wave, and the 5th minor wave of the 5th wave. So at this point in time, with the information that I got, this is my fifth wave, can change and be extended more, and we may come back and look at it and put back on track our preliminary wave count. This is about mastering area wave count like an eagle when we are looking from above to the eye of an eagle, because we cannot zoom into the past data, but all we can see, that's all we will work with. First wave, second wave, third wave, fourth wave, fifth wave. One trending phase is completed, followed by a flat correction. Now a new trend has begun. First wave, second wave in a flat correction, third wave has been extended. Again, that thing that we are calling third wave here may be extended, which means this one all the way up here, up from here all the way up here, may be the first minor wave of the third wave, and so on, and can be extended before we can even talk about the real fourth wave and the fifth wave, which can also be extended. So this is the challenge that we face sometimes when we are counting waves. Traders sometimes may get confused when the waves start extending, all right, and then they'll get lost and they say, oh, well, my previous wave count is wrong. It was not wrong, it's that there was an extension, so you have to call things as they are, because something that was called before third wave may become the first minor wave of the third wave, or something that is called the fifth wave may become the first minor wave or the fifth wave itself, or something that we call before the first wave may become the first minor wave of the real first wave. The wave extension make the price structure a bit complex, so trader may understand that the area wave extension is making the wave count sometimes complex, and we should be aware of it, and this will help us to put back on track our preliminary wave count. But as we are looking at this chart from above to the eye of an eagle, that's all we can say at this junction. So I will say to traders at this point in time, draw a line right there, but that, you see, because we are on a monthly chart, that monthly candlestick bar is not yet closed. When it's closed, all right, we'll say priority to bullish signal above the 21443 and priority to bearish signal below it. But don't be surprised if it breaks above it, then we will say that probably there is an extension of the fifth wave, or we were already in an extension of the third wave. Are you confused? Don't get confused. If you are confused, it means that you have to go and watch the video that are titled How to Put Back on Track Your Elliott Wave Account. Alright, I don't want this video to be too long, so this is what we see. It's very fast. We can see all the waves from above. It looks like first wave here, second wave, third wave, fourth wave, fifth wave. There was no Elliott wave violation. Then we have a flat correction here, and then we have a new trend right here. Will the new trend end here? That is the question. So the next step that we can do is to go now to the yearly chart and see the bigger picture and see whether everything is aligning correctly. So you can see what we were calling right here. You see here, first wave, second wave, third wave, fourth wave. And now where are we? Am I lost? Yeah, here it is. This is this is what we are calling the first wave. The second wave is somewhere here. You remember, the second wave is somewhere here, and the third wave, the fourth wave, and the fifth wave. So from here all the way up here, that's what we were calling the first trending phase, followed by the flat correction, and this is our new trending phase. Can we call this one a new trending phase? Let's check. How do we verify that? We apply Fibonacci extension to the previous trend. Did the new trend go above the 138.2% Fibonacci extension level of the prior trending phase? Yes, it did. Therefore, we can certify now that what we were labeling a new trend is true. All right. So looking at the bigger picture, it looks to us that what we have counted 1, 2, 3, 4, 5, first trending phase is the first wave of the higher degree, and what we were calling this the correction of the first trending phase is the second wave of the higher degree. And what we are calling now the new trend is the third wave of a higher degree. So first wave of a higher degree, second wave of a higher degree, and now we are now in the third wave of a higher degree. After that, if it is completed, okay, so at this point in time, that's what we have. It can go up more. All right, it can go up more. So we are now approaching. That's why I'm at. So we have 261.8% Fibonacci extension level of the prior trend. It can go up to that level. So let's put some line there. So if the extension continue during the new trend, watch the level of $233, and also even the 314%, which is in the zone of $277 level. So we may say that our new trend may end somewhere near the 233 or 214. $214 level. If it end here, we'll expect in the fourth wave like this. If it end here, we'll expect if it ends at $233, we will expect our fourth wave like this. But if they extend it more all the way to the 314% level, we will expect our fourth wave like this before we will start talking about the fifth wave of the higher degree. As we are here now, I'll put it here for now, but knowing that, okay, that new trend may go up to $223 or $277, but we leave it here, so we may say possibility that we may find a resistance here, and then we may have, okay, the fourth wave of the higher degree, followed by, okay, the fifth wave of a higher degree. And again, as we are talking about a higher degree, anytime we hear the word, okay, third, first, and a fifth, those can be extended. So though we put it like this, we may come back again and start labeling, okay, the wave differently if the extension, okay, is prolonged. All right. So I hope, I will speak to the trader that left a comment earlier on that I was talking about in one video. That trader shouldn't feel too bad about anything. All I did is that he's no more allowed to make comment. I may remove that, restriction, all right, in the near future. Maybe it's a new trader learning, but the point I'm making, this is what we are doing all the time, the same thing, counting wave, okay, seeing it from different angle, okay, looking at different charts, okay, practicing, okay, the more wave we are counting, the different scenario we are looking at. Now we are seeing a lot of extensions that are making the wave count a bit complex. How do we handle those wave extension and put back on track our preliminary wave count? So by doing so, we are becoming a better area wave analyst, area wave practitioner, area wave student, and we are improving our wave count, and we can make excellent forecasts. All right. So anytime we count wave, we leave a question mark on it, especially when you call anything first, third, and fifth wave. Know that those waves can be extended, and we just concentrate, which means after we count the wave, now we switch our attention to the price. Okay, whenever you see that, okay, there's a high channel, we may have a fourth wave, draw a line there because you want to buy or sell. Is there a signal to sell? First, we want to find a setup, look for, so as an area wave trader, especially you are expecting a pullback, all right, or a continuation during the trend, you want to use candlestick pattern, all right. So you look at the candlestick pattern, those will help you, because if you want to sell or buy, look at the candlestick pattern. Is there a trading setup? That's why you do care about it. The wave count will help you to know where you are, but when you're about to buy and sell, look for other signal, other indication, like candlestick pattern, bearish chart pattern, bullish chart pattern, trend line is broken, price breaks a bow, retest, things like that will help you now to activate, okay, your buy and sell a strategy. All right. This is the end of this short tutorial talking about mastering area wave count like an eagle. You look at it from far away, and what you see, you start labeling it. Sometimes you may do that, you may quickly notice that there is an area wave violation, then you may have to readjust your wave count and see what is taking place. Is there an area wave extension? Is there a distortion? Have you missed something? If it's not clear on a monthly chart, because I start doing my area wave count like an eagle on on the monthly chart, it's not very clear. I may drop it down to the weekly chart, or I may go to the yearly chart to see, okay, what is taking place. So I may not, okay, look at it and see something else that is not exactly what I thought. All right. Okay, so if you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. The financial instrument that we are analyzing today is 3M Company, Epic Mike. Okay, this is an American stock that belongs to the industrial sector, diversified industrial. If you think that this video has been useful to you, all right, feel free to let us know by giving us the thumbs up. If you think that, Joe, this is another useless blah, 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 all right, let us know, because you are allowed to make comment like that, that's fine, all right, but don't make personal comment, as I say to that trader. Let us know by giving us the thumbs down, all right, but if you think this is an essential tutorial that other traders may learn from, all right, feel free to share it on Google+, on Twitter, and also on Facebook, all right? Happy trading to you all, and speak to you as soon. We are the TSTW24 traders, talking about mastering Elliott wave count like an eagle.